Senhoras e senhores,
Ladies and gentlemen, good morning. Welcome and good morning everyone who is watching us online. Feel also welcome.
on behalf of the organizers, allow me to welcome and thank you for having taken the time and having come from so far to join us here today. For you, the service of simultaneous interpretation into Portuguese is available as from now. Bem, sejam todos muito bem-vindos
So welcome again to the second day of the second seminar of the Sovereign Wealth Funds in Brazil that has the topic Sovereign Wealth Funds, Efficiency, Development and Creation of Intergenerational Wealth. This aims at improving the public understanding and the transparency on the subnational funds of wealth constituted in Brazil. I'm Flavio Fernandes and I have the privilege to be here with you today. And for visual accessibility, I will make a brief description. I am a woman, I am 174 and brown hair, brown eyes, and straight hair, and I am wearing a blue dress without shirts. And in the second day, our schedule, besides the opening table, we have an English presentation. We want to reinforce that the simultaneous translation is available for those who need it, and especially for those who are watching the streaming. We have a specific video in Portuguese. Besides this session, we have three debate sessions, and at the end of each one, if we have time, we have a Q&A session that can be sent by those who are watching through YouTube through the chat room in the video. And for the first session in this morning, I invite to the table our host, the co-director of the Forum of Brazilian Sovereign Wealth Funds, Fernanda Feio. And to join her, we invite the coordinator of projects of JFI in Brazil, Paul Katz. Let's hear the initial remarks of Paul Katz, coordinator of the Jane Family Institute, JFI. Good morning. Thank you very much for your presence. It's really an honor to be here with all of you, both today and yesterday. And I am here representing Jane Family Institute, that is an institution of applied research in social sciences based in New York. Almost 4 years ago, we have been collaborating with the Federal University here in Brazil, and in terms of incubation with UFI and representative of other institutions of the Forum of Brazilian Sovereign Wealth Funds, with a contribution with four royalties subnational funds here in Brazil, and it has been a pleasure to collaborate with so many incredible colleagues, and I know that uh, at a certain point, Fernando is going to thank some of these colleagues, and I want to briefly thank the representatives of the four funds, the Ministry of the Espírito Santo, and the cities of Ilhabela, in São Paulo, and Maricá, in Niterói, here in Rio. And I want to thank the co-directors of the forum, Fernanda Feio and Leandro Ferreira, and also our coordinators, the academic coordinators, Fabio Waltenberg and Carmen Feijó. It is really a great opportunity for JFI to support this project, and I am very excited to participate in the vital debates throughout these days with all of you. Thank you. And for her initial address, let's hear our hostess, co-director of FFSB, Fernanda Feio. Thank you. Good morning, everyone. My name is Fernanda. I am a woman. I am 172. I'm wearing black. I am a blonde with long hair. I would like to start thanking the presence of everyone, and this is a very special moment to all of us in the forum This is the event to launch our Brazilian Forum. We worked for 1 year in this process, and it's a process that brought us a lot of joy. And I want to thank especially the Federal University of Rio, FAPERJ, who is funding this event today. Our speakers, some of them came from a long distance to talk to you about this topic. I want to thank Synthesis that is doing a wonderful work in these events, and I want to thank especially to one of our employees, Danielle, who since always has been a wonderful worker, and George that joined us that came to revolutionize everything we do here. So thank you very much. The Forum of the Sovereign Wealth Fund is a partnership between UFI and JFI, and it has four sovereign wealth funds as founders. The Fund of the State of Espírito Santo and the municipalities of Maricá, Ilhabela, and the next meeting will be in Ilhabela, and Niterói. The idea is that from now on, we are going to incorporate new funds. The idea is to be bigger and bigger, and so we can act as a discussion center of exchange of ideas and problem resolutions. So now I'm going to officially open our seminar on the second day, the academic seminar, with the lecture of Adam and Victoria, and thank everyone for being here. Thank you. Thank you. Thank you for the message. We would like to invite Fernanda to take her seats in the audience, and Paul Katz can preside the next session. Thank you. On behalf of Paul Katz, I would like to invite the members of the next panel that is called Sovereign Funds Award in Transformation. So, the professor of Maastricht University from Netherlands and the main researcher of the European Sovereign Wealth Funds, Aaron Dixon. We would like to invite the strategy of sovereign wealth funds, Victoria Barber. And for this session, I'll pass the floor and the work to our moderator, Paul Katz. Well, now I will switch to English. It's a very awaited moment in these two last days.
Across the world for their work on sovereign wealth funds. So I'm going to briefly introduce them, and then the suggestion was that we could conduct this session really as a discussion. So rather than formal speeches, we'll kind of do a series of questions, and we'd really love to have your participation in this as well. So we'll be pausing for questions from the audience at various points throughout, and please do let us know if you'd like to jump in with a question. Just as a reminder, we do have simultaneous translation into Portuguese, which is really very exciting. So if you're listening to me right now without headphones and wishing that it were a little easier to understand, we have headphones out in the hall. So without further ado, I have the great honor of introducing our two discussants today on this panel. First is Adam Dixon. Adam Dixon is Associate Professor of Globalization and Development at Maastricht University, and also the lead of the Globalization, Transnationalism, and Development Research Program there. He's the principal investigator of the SWIFT's Europe project, funded by a generous grant from the European Research Council. The project is focused on explaining how sovereign wealth funds are made legitimate as state actors in global and European financial markets, and how these funds are being used to legitimize and facilitate state intervention in economic development in countries across the income spectrum. From February, he will be the Adam Smith Chair in Sustainable Capitalism at the Edinburgh Business School. He has been working on the topic of sovereign wealth funds for more than 15 years and has published numerous books on the topic, including recently the book Sovereign Wealth Funds Between the State and Markets, published by Agenda Publishing. So please join me in welcoming Adam today. We are also honored to have with us today Victoria Barbary. She is the Director of Strategy and Communications at the International Forum of Sovereign Wealth Funds, a global network of sovereign wealth funds with members from almost 40 countries. In her role, Victoria works with the International Forum of Sovereign Wealth Fund members to curate a program of online and offline knowledge sharing and networking activities related to all aspects of their operations, from governance to investment strategies. Victoria has worked in the sovereign wealth fund world for over a decade and has become a noted author and commentator on SWIFTs. In 2012, she founded the Sovereign Wealth Center, an online provider of data and analysis about SWIFTs, now part of the Institutional Investors Sovereign Investor Institute. Before joining the International Forum, Victoria was director of Investec Asset Management's Investment Institute, which was responsible for the firm's thought leadership. She started her career as the senior analyst in the office of the chairman of the Monitor Group, a strategy consultancy now part of Deloitte. And she earned her PhD in history from Pembroke College at the University of Cambridge. Please join me in welcoming Victoria here to the table with us. As I mentioned, we're going to approach our session today really in the form of a conversation. Adam and Victoria were kind enough to prepare a list of questions. I've got kind of some interpretations and riffs on those questions to ask. I thought it would make sense to begin with a rather general question, which is, of course, both of our speakers on this panel have vast experience in the world of sovereign wealth. So I wonder if you could tell us a bit about what you see as the global picture for sovereign wealth funds. What are some of the major trends that you perceive today? And based on what you have perceived over the last day, or really several days of conversation, where do you see these Brazilian funds fitting in? And perhaps we can begin with Victoria.
Thanks, Paul. Yeah. When Adam and I started out looking at sovereign wealth funds in sort of 2007, 2008, sovereign wealth funds were very much savings or stabilization funds that had been large pools of money that had been either generated by oil royalties or trade surpluses. And there were these big pools of money that were used to invest in international markets, either for a stabilization fund in liquid assets like international fixed income, US treasuries, etc. Or in the case of some of the bigger funds, they were looking at more advanced strategies in equities and private markets. Over the last kind of 15 years, what we've really seen is a real change in that world and a real expansion. So I'm going to just mention a couple of themes. The first is that from the kind of end of the global financial crisis, we've seen a real growth in the number of sovereign wealth funds being formed. So there are many more now than the IFSWF's 26 original founding members. We now have 46 members. And that represents just about half of global sovereign wealth funds, as against there were about probably 30 in 2008 when we were formed. And these sovereign wealth funds aren't all this kind of classic savings fund, oil fund kind of model. In fact, actually, I think we're only about half our members are now that kind of sovereign fund. Increasingly, what we're seeing is a lot of countries from from across the kind of developmental scale. So we've had a lot of sovereign wealth funds being formed in Africa, for example, but not necessarily from oil or commodity revenues, as you might expect. And increasingly, these funds are a smaller scale. So a lot of our members have assets of maybe under $1 billion or around about $1 billion US. And these funds are really looking at investing what money they have from the state or assets they are given from the state to invest at home for either, domestic development, so looking at strategic projects, potentially, really funding social programs, making sure that government spending is kind of enhanced in social programs, in education, in infrastructure, and sometimes they're actually, supporting local companies, looking at strategic sectors. So whether that is, as I said, infrastructure or supporting small and medium-sized enterprises, we've seen a real development in that kind of domestic agenda for sovereign wealth funds. So I think that the expansion of the universe, but also in terms of number, but also in terms of remit and mandate and how they're structured on the governance side. Increasingly, we're seeing sovereign wealth funds being structured, particularly those domestic focused ones that are doing strategic projects, as domestic companies rather than as a more traditional type of fund. And that's really driven by local circumstances. And I think that what's been really interesting this week is so someone who kind of sits in the world of sovereign wealth funds, looking at them internationally, and I understand my members and I speak to them every day, and then you kind of come to a new world where there's a different set of sovereign wealth funds that you don't know. And I forget that I say it, and this has really helped me remember that it has a meaning, is that every sovereign wealth fund is unique and every circumstance is different. And while there are general principles and practices and best practice that we can pick up, whether that's through the Santiago principles or from learning from peers globally, actually it's not about following a cookie cutter approach. It's really about kind of taking the principles of what you're trying to achieve and applying them to the domestic politics, what you need to do with the money. And I think that's been, for me, a really exciting thing to learn this week. And it reminds me that I shouldn't get complacent about that I know all about sovereign wealth funds, because you always have to keep learning. So I'll leave it there.
Thank you so much. Adam, I wonder, your perspective is, of course, a bit more academic. Do you agree with these trends that Victoria has identified?
Yeah, so firstly, just to say that I'm very excited to be here back in Rio. I was here 18 years ago and for a couple months, and I loved it. And I think Brazilians are some of the nicest people in the world. So it's really great to be here and to go to Samba, which we're going to do again tonight. But back to being serious. So yes, everything that Victoria said is correct. What I'd like to do is, though, as an academic who gets paid to think and work as an academic, put it in a slightly different context, or think about, like, why are we seeing so many sovereign wealth funds now, right? The growth of sovereign funds has really been just in the last 2 decades. Yes, before 2000, we had some very large oil funds. So in Kuwait, Investment Board was set up in London in 1953. It's now the KIA, the Kuwait Investment Authority. You had the likes of Singapore setting up funds in the 70s, and then Norway set up its oil fund in the 90s. But the massive growth in sovereign wealth funds has really come in the last 2 decades. And it begs the question of why. And what's fascinating about it is that if you think about the world and the international political economy, but also the domestic political economy in places like Brazil in the 80s and 90s, what was that? It was a period of privatization, of neoliberalization, where the state had to be put to the sideline. Now, obviously, Brazil hasn't privatized everything as much as Western European countries did. You still have large development banks and state-owned enterprises like Petrobras, but neoliberalism was very strong and still is here. And you could say that, from the global perspective, that was the leading kind of frame for how states should act. States shouldn't be direct actors in capital markets. They should be on the sidelines providing regulation, rule of law, but capital markets and investment should be the preserve of private actors. Now that's changed significantly. We see, as Victoria mentioned, sovereign wealth funds, some very large, many very small, from across the income spectrum, from very rich countries to very poor countries. with all kinds of different mandates. But many of the new ones are being set up to invest directly in domestic markets to foster industrial policy. Industrial policy, which was a word that went out of fashion 2 decades ago and now has been rekindled, and we could actually use industrial policy, and even the likes of the World Bank and the IMF are accepting industrial policy as being something that is a necessary part of what states do. And so what's fascinating is that we see so many sovereign funds, but it's a reflection of, at the same time, the re-emergence of the state as an economic actor. But don't be confused with that as meaning a re-emergence of the state as you would see in the 1950s, right? A very direct kind of top-down state. The types of organizations that we're seeing, both in terms of sovereign wealth funds, but also state-owned enterprises, is that these are operating in the same fashion as a private sector entity. They are often staffed with professional asset managers, no different than any private sector entity. And so what you see, in effect, is the state adopting the practices that you find in the private sector. And we see, if to use an academic term, the financialization of state action and state activity. And here in Brazil, though, just listening over the last few days in the conversations that I've had with people, is that the new funds here haven't quite adopted this, let's say, financialized model of the management of these funds. And then hopefully we'll have some more conversations about that, because it's a slightly separate model than many of the other funds that we see across the world, which are, if you like, capitalized. They're focused on investing in capital markets, or they invest in domestic markets in a manner that you would expect from a private equity or a venture capital fund. And here in Brazil, it seems that the funds have not quite moved outside of the traditional realms of fiscal policy and treasury management. And that's perhaps a good thing, but it's a question I think that we should discuss further.
Well, I mean, along those lines, actually, I'm curious to ask, maybe this is an excessive kind of provocation, but in pointing to this trend kind of toward and also away from financialization, I mean, do you see that as kind of an implicit critique, your use of that term?
So, again, if you, I know here in Brazil there is an academic tradition of looking at understanding financialization, some quite good work that's being done. Now, it depends on how you approach it, right? So there's a lot of critical work about financialization as effectively. The problem is that the political economy question is that, do we want our economies to be driven by the expectations of financial markets and financial performance? Do we want to financialize social policies? Do we want the state to be acting like a private sector entity? And in some cases, you could argue that it's good, right? But in other cases, it's not, right? And I think that's where the discussion on what the mandate of these funds is and how they operate needs to be decided. Because there's many cases where you could argue that it's a good idea for the state to have some kind of a strategic investment fund that, let's say, for example, that the National Development Bank or a local development bank is not doing a good job, then you can set up a new institution that acts like a private sector entity to address market failures, to catalyze new industries, to help kind of reform the private sector to get them to do a better job. So there's arguments for doing that, particularly in very low income or middle income countries where there's the institutional setting and financial sector development is poorly developed. But then often you have to ask in a place like Brazil is that, there's a sufficient amount of banks and investors that why aren't they doing it, right? And maybe it's not that the state needs to act like them, but change regulation, change policy. Now, that model is possible. Then there's also the model of if you want to save over time. If you want to save over time, how do you get the best return, and how do you protect that wealth over time that you could then use for other social policies or other economic policies? And if you want to save over over generations, then maybe it is advisable to invest in capital markets. But the risk is, and Victoria can also speak to this, is that if you're going to set up a, let's say, financialized entity, then it needs to have the human resources to execute the particular strategy, whether it's doing private equity deals or it's managing assets in a different range of capital market securities and different asset classes, both domestically and globally. And that requires human resources, but it requires a governance structure that allows that to happen in a not only legitimate, but an effective and transparent manner. So these are, again, going back to the earlier point I made, is that understanding what the goals are and what the mandate is incredibly important, and then designing the institutions and the organizations around those mandates and those goals is important. So one final point is that I always say that for me, it's the sovereign fund solution or the kind of financial aid solution shouldn't be the first point of that a state or a municipality should look at. There's very good public policies that we know work and that are democratically legitimate that should be tried first before setting up these grand strategies that let's set up our Goldman Sachs or let's set up this type of investment firm to do this, when actually there's really good public policies that we can have that we know will work.
Can I just jump in there? So I think that's really important. And if you look at, I think there's a couple of things that we think about when there's this concept of sovereign wealth fund. One, a lot of the funds that you immediately think of have been around for a very long time, and they didn't start that way. They've evolved into what you see the Abu Dhabi Investment Authority doing, or GIC from Singapore. They didn't pop into existence in that way. And even, I'll take the China Investment Corporation is a good example. It was formed out of central, it was a very complicated way of doing it, but the Chinese government wanted to invest in the Blackstone IPO in 2007, and they needed a vehicle to do that. And it wasn't brought out, and so it's always had this kind of desire to invest abroad. And it doesn't have that kind of, I think, public, it's a fiscal policy tool, it's a diversification of foreign exchange tool. And I think that it's really important also to realize that a lot of these sovereign wealth funds come from places with much more centralized decision making in their politics. So there's in a lot of them, so if you look at Abu Dhabi in 1974 when they set up their, it was the British government set it up because there was all this oil money, that they had a population of 200,000 people and billions of dollars coming in. And it was just a decision made by the powers that be. And I think today, in a country like Brazil, that's not the way that they work. There's a much broader conversation. There is a much wider range of needs. And I talk to a lot of my African members about this, which is, what is the best way to invest for future generations? We talk a lot about intergenerational funds, right? And I often say that, these countries, and Brazil is one of them, they're not Abu Dhabi in 1974. They are big, populous countries with lots of development need. Is actually the best way to invest in your future generations? Is it really to squirrel money away and have a big pot of money and say we're really rich? Look, we're on the top table. We've got this cash. Or is it to spend on education, on infrastructure that's going to create jobs, that is going to really help the future generations of your country? And I think that there is a challenge where public spending is not efficient. That, as Adam said, that you may need a strategic fund to do that stuff directly. You may, and they would be a partner and try, and a lot of these funds want to attract FDI, so a foreign direct investment in, and partner with the private sector. But where public spending does work and you have a lot of money, there's, Adam and I have talked a lot this week about the Chilean model, the Economic Social Stabilization Fund, where they have a large sovereign wealth fund that the copper royalties go into. And that money, when it's needed, is then spent. So during the global financial crisis in 2008-9, and during the pandemic, what they were able to do was maintain government spending using that fund. And you get a lot of headlines, and this is, about, oh my goodness, they're spending their sovereign wealth fund. And my point is that's what it's for. You've saved this money so that you can use it. And I think there's another point that's related to that, which is, if you have a large amount of oil royalties, you can't spend them all at once. You can't just try and push them into the economy. Otherwise, you're going to end up with a lot of white elephants and a lot of wasted money. And quite honestly, the private sector sees you coming, and So I think that there is an important point about, if you do have a lot of money, do you use that as kind of a holding pen to funnel, money into the economy up to the absorption capacity? And that's a kind of big, it's an established economic term, but I think that's really important, of thinking about the sovereign wealth fund is not in a means to itself. It's not, having a sovereign wealth fund is not a means to itself. It is a way of, in a country like Brazil, it is a way of, it's an economic policy tool to really drive development. Okay.
So one point that I wanted to add, so I think, again, the Chilean model, which is very close to Brazil, is a model that should be considered or looked at in terms of their experience. Often when countries in the global south in particular that want to set up a sovereign fund, the model that they look at and the country that they always look at is Norway. They see Norway as having 1.2 or $3 trillion for a population of 5 million, and they think, wow, if we have a sovereign wealth fund like Norway, we're going to be rich. And as I often say, and have done for many, many years, when I speak with countries that are thinking about setting up a sovereign fund, as I say, you have to remember that Norway was rich before it became incredibly rich, right? So Norway was an advanced Western European welfare state with very high taxes, very egalitarian. They publish everyone's tax and wages every year, so you know how much your neighbor is making. But they were wealthy before they became incredibly wealthy at having their sovereign fund. So the point being is that looking at Norway and how Norway manages its oil wealth is not necessarily the most appropriate for, I would say, most countries, and most countries that still have the ambition to and the need to lift tens of thousands of hundreds of thousands of people out of poverty. And so for a country like Brazil, but even for, I would say, most advanced economies, and that's why you see most advanced democracies not having sovereign funds, is that they have social needs that trump saving for future generations. And that's why the Chilean model is better, because it's focused on stabilizing copper revenues over a 10-year period so that the government has a stability in terms of how much it can spend, but it is focused on spending and investing in today's population. And so that's why it's really important to not always look to Norway as being this incredibly amazing model, because, again, they were rich before they became rich. It's great to be Norwegian, right, if you have citizenship and you're not worried about it. But even in the case of Norway, and I'll stop, is that Norway's economy is still very dependent on oil and gas, and we're going to go through an energy transition at some point, hopefully fast. And Norway's economy is insufficiently diversified, particularly if you compare it to places like Sweden. Sweden is not energy dependent, but Norway is very still much with economies that focused on natural resource production, and that's a problem. Now, they can draw down the sovereign fund over years, so the Norwegians will be fine, but in terms of economic activity, it's still very narrow economy.
Well, speaking of dependence on oil, I wonder, Victoria, do you see any clear examples of funds that have done an exceptional job diversifying away from kind of one key commodity, like in the case of kind of Norwegian oil? I mean, are there exemplary funds that it makes sense to cite?
So I think if you're looking at a fund where they have used oil revenues to they have specifically used oil revenues to diversify. I think one of the Abu Dhabi funds, Mubadala, has done a really good job. So that fund started off as, its roots are in a gas pipeline between Qatar and Abu Dhabi in Dolphin Energy. And what they've done is that it was formed in 2002, but particularly after the financial crisis, the government favoured putting money into Mubadala, and they've built, in that kind of late 2000s, early 2010s period, they built hospitals, they built aviation industries. They've really worked. Masdar, the big, they have a huge renewable energy arm. They've built all sorts of satellites. It's a huge diversified fund, and that government made the decision to channel oil revenues after 2008, particularly after 2008-9, but before that as well, into diversifying the Abu Dhabi economy. And I think that what's now happened is that they've come to a point where they built those industries and they're now privatizing them, and they're now becoming more of a kind of traditional sovereign wealth fund. They still have, their petroleum arm, they still have a share, but they sold a share of Masdar. They've really kind of come through that cycle. And I think that Abu Dhabi generally has a lot of different, if you go and look at Abu Dhabi state investors, there are lots of them. And the government has used that oil money across a whole range of different, domestic companies and state-owned companies. But really, they've done a really good job of generating non-oil economic activity. And I think to a degree, that's one of the best models. If you were saying, are you going to use your oil revenues to diversify your economy, specifically? But I think also, that's not necessarily the only way of doing things. Again, I go back to the Chilean model. If you already have good, accountable public spending models, having a sovereign wealth fund that can help fund that and smooth the government revenues, that's, especially in a country like Brazil where you have a vibrant democracy, that's always going to be seen as more legitimate to a degree. Because it's one thing with working about sovereign wealth funds, particularly working with the media, is the great degree of skepticism about sovereign wealth funds, and that, is it just the government squandering public money? And I say to sovereign wealth funds all the time, my job title is Director of Strategy and Communications, and that was always a kind of communications was always kind of one of these ancillary things we kind of talk to people about what we do, but and actually it's becoming much, much more important, particularly in a democratic country, to talk to your citizens about, be really open and very about how you're using the money, what it's there for, and explaining it. And we used to have this model that sovereign wealth funds 10 years ago would put their audited accounts online and say, look how transparent we are. We publish our audited accounts. Well, how great. And actually, the problem with that is, unless you are a chartered accountant, you can't read a set of accounts, and your average person on the street doesn't know what that means. And so there is a whole range of communications that will encourage legitimacy, that it's not just about audited accounts. It's about explaining in a accessible way to your citizens and the people that you're spending the money for, about how you're doing it and what you're doing it for. And I think that's becoming, as the sovereign wealth fund world has expanded into more democratic countries, this has become so much more important. And I think that but the challenge then, and Adam and I have been talking about this week, is you have to be very clear about what you're doing. I was at an event in August with African sovereign wealth funds, and one of the massive takeaways from that event was the government wants the sovereign wealth fund to do everything. It wants it to be the silver bullet to sort out oil dependency, to prevent inflation, there's a whole lot to do strategic industries, to invest in infrastructure. There's this British vernacular, a laundry list of things they want to do. And these funds can't do everything. And I think it's really important that in the way that you think about this is go, what are one or two things that we can use this money for? Focus on them and really communicate that incredibly clearly, because that is where legitimacy and accountability lies, is in that clear mandate and your ability to do the elevator pitch, right? Being able to explain it very clearly. And I think that's super important with my communications hat on, but I do think that I am seeing that increasingly as being important. And I take an example. So in 2018, I said, let's do a reporting and communications workshop. I got 12 people there, and it was a bit of it was a real challenge to get that many people in to that workshop. We've just had our annual meeting. We had a meeting of our advisory committee, and reputation management and communications and all of this stuff was one of the most important things that we came out of that meeting. And so I think that it's changed over time, but it is really important. And as you are thinking about setting up and fixing mandates, being very clear on the mandate and how you communicate that is really important.
So, I mean, if I may ask a follow-up, and perhaps this is a slightly unfair question. In a context where there are so many pressing needs, like here in Brazil, how do you think a fund, like the ones that are gathered here today, can go about identifying those priorities in a democratic fashion?
So, I mean, far be it from me to tell a local government what their pressing needs are, but I think it is a real point of being very disciplined and looking at where you think I think there are two things. Do you have a problem with putting money to work? As Adam was saying earlier, do you need a strategic fund that's going to deal with the fact that money isn't being put to work? Do you need to have the government take a lead and do a strategic fund? That is not a yes or no answer. There are lots of strategic funds, but generally where there aren't existing public bodies that do that, or government spending isn't very effective, or there's corruption, or there's a lot. Or do you say, right, we have an existing spending policy that we think is what people need, and actually what that just needs is more money, and we want to use our fund for that. I think so. It's I think you have to identify those needs yourself. It's not kind of, I'm not an expert on every situation, but it's like, where do you think an extra bit more money is going to help solve the problem that you're looking to solve? But you have to identify what the problem is and then decide how to do it. I go back to it, and as I really discovered this week, every sovereign wealth fund is totally unique. We can give you principles, we can help you think things through, but ultimately it is absolutely a unique question. So I can't answer that, but I think it's important that you think about that really systematically. It's a good question, by the way.
Okay. So I think, there's a simple answer if we take democracy seriously, that it's basic needs, right? Everyone should have access to good housing, good education, good health care, that we give young people and older people opportunities, and we, and I say we as humanity, should deliver on that. And thinking about how these sovereign funds can assist in that, yes, it can be complicated, but it doesn't necessarily have to be. So you can imagine taking these windfall oil revenues that you're receiving now and saying, how do we ensure that we use these to facilitate these basic goals that should be our goals. If they're not your goals, then I think that's the bigger problem, right? But it's a matter of then deciding, okay, how do we want to employ this windfall? We know that oil revenues are volatile. Right now, oil prices are super high, so money is coming in. But this could change very quickly and very rapidly. Commodity markets are very, very, very volatile. We know we are in an energy transition. We'll still require oil and gas for quite a while, but the transition is moving relatively quickly. And again, maybe those revenues they'll be time limited. So you're getting the money now, and you can't spend it all at once. You shouldn't spend it all at once, but then how do we then employ that, right? So that's what finding, do we want to use that to provide for some kind of social policy. So we can take one example that's often thought of as the oldest sovereign wealth fund, though I think definitionally some don't look at it as a sovereign fund, is the Texas Permanent Education Fund, which was started in 1821, if I'm correct, at statehood. And that fund for more than 100 years has been used to finance public education at primary and secondary and tertiary levels in the state of Texas. And it's a very basic savings fund that has this pot of money, and then money from that endowment can be used to finance education. But it's a very simple model, right? It's a very simple one goal or one mandate, savings over time. And in the case of being in the U.S., it's easy for the treasury, the treasurer of the state of Texas, to invest that in U.S. capital markets, and it works, right? So again, I think it's looking at what is possible here in Brazil in terms of managing that savings in a cost-effective and transparent manner, and then modeling how you can utilize those revenues for particular social policies in the municipalities you're in. But that's a very different model than, say, if you want to employ that money to invest in infrastructure or finance small and medium-sized enterprises. So again, it's about setting out what you can do and sticking to a very simple model, particularly in the beginning. Maybe things will change over time, but simplicity, I think, is very important.
Well, so the word social actually has come up a number of times so far in this conversation. And I think in some ways it dialogues right with this necessity of public legitimation that all of these funds are facing, right? They wish to show social returns in addition to financial returns. And so I wonder, how is it possible? What strategies might a sovereign wealth fund adopt to demonstrate its social impact in addition to financial returns? Perhaps either of you may have thoughts on this.
I'll go. Okay. So there's two things that need to be separated, right? There's the investment function, right? What do you do with this money? Do you invest it in capital markets? Do you park it in the bank, earning some kind of interest? Or the investment function if you want to invest in, say, private equity or infrastructure. That's the investment function as a sovereign fund, as an organization, right? Kind of like a development bank, but we like to think of them as different, and often they are different than development banks, but as a financial institution, right? So there's a financial function. Then you have the policy function, right? And so the policy function is saving for future generations, or stabilizing resource revenues over time that go into the budget, right? So it's those two things. And where do you get social impact from? Now, you can have social impact on the investment side, though I think that's very hard to do. Right now, it's, ESG is all the discussion in the financial markets, and investors are worrying about environment, and Victoria can talk about social in terms of sovereign wealth funds, right? What does social mean, right? I mean, some people think social is investing in companies that have good HR policies, human resources policies. Social can also be not investing in companies that use child labor, right? So that's the sort of impact on the financial side. or there's, kind of blended finance, and there's all these things that are in the financial world. Often I think I'm skeptical of many of them, though we should try to make, greening finance and making finance more socially aware. I think that's a good thing. But in the case of the policy function, I think that's where, here in Brazil, and particularly with your funds, that's where the impact will be felt. And that's where I think the most effective impact will be felt, right? And, so it's the impact of providing the municipal government with a revenue stream that is stable, such that the municipal government can, provide basic services with, even in the times of economic dislocation and volatility, right? That's a good social impact. But the point on both of these is that if you want to do the social on the investment side, which I think in your case is probably you're not there yet, and maybe it would be too kind of, it's not an efficient use of your time at this moment, but it's the social side on the policy function. But in both cases, being very transparent and open about what you're doing and educating the population. So a good model to look at is in New Zealand with the New Zealand Superannuation Fund. They have about 25 billion, and their fund, the goal is to fund the baby boom retirees. Formula One is here. To fund the baby, pension or the aging society in New Zealand. But they are very, very, very transparent about how they invest, what they invest in, and they almost have an education kind of program for the society to say, this is what we're doing with your money, this is why it's useful, this is the thing. And so I think in anything that you do, you have to be very clear on what it is you're doing and how you're doing it, and that's how you get the legitimacy of the population. But it's also delivering on that social impact. That's how you get it.
Yeah, no, I totally agree with everything you just said. And we actually did some research about this, so thank you for that, this year with our members. And I think, so if you are using your fund to, fund spending, local government spending, I think that social impact is much easier to communicate and describe. And it is because that's an existing policy that you have been elected to execute, and it's so much easier to do. That said, I think there's one interesting thing that came out of our research that there are two ways, and Adam puts it slightly differently to the way that we did it, but it's exactly the same point, which is social is both, you can think about it on the investment side as an input, or you can think of it on the policy side as an output. And older, more sophisticated investors may only think about it as an input. So if you look at GIC from Singapore, they don't really think about the output, the impact of their investments. They just want to make sure that they're managing the risks in the S of ESG, the social aspect, so that they're not open to scandals that they've invested in a company that's investing in child labor or sweatshops or whatever. So I think that's an important thing. And the other thing that I think is really interesting about we didn't make this really explicit because we had other things to discuss, but I think with ESG and this idea of social and accountability being now much more important generally in financial markets, but also I think people generally are much more aware of what are you doing with my money, that the more recently founded funds were much clearer about and had a much broader range of things that they were clear about on their impact than some of the older funds. So my organization was formed in 2008, and the kind of crux of the matter was that all sovereign wealth funds had to invest on purely financial grounds. So in 2008, environmental, social, and governance weren't financial grounds. They were policy things, and a lot of our members were like, we've been distancing ourselves from these things for 10, 15 years, right? That's what we were meant to do. And now the move towards saying, well, on the investment side, that, these things actually do have a financial impact somewhere along the line. That's been quite a big change. But being formed now, and I think also in this environment where you do need to show more legitimacy, you do need to show accountability, you do have to have an impact for your citizens. I think that's a real benefit because you hard bake it in at the front at the beginning. You're not having to retrofit it, and I think that's a real benefit. So you figure that out now, and you get there. It's much easier than some of the more established older funds are having a much tougher time about into ESG integration or social integration. And the other thing I'd just say is that if you take the kind of we finance social spending, what good social practice is changes over time. So what is good practice now was leading and kind of very radical in kind of 2016, and it will continue to evolve. On the investment side, that makes it, on that kind of investment input side, it makes it really, really hard to continue to evolve those things. However, on the output side, on the policy side, that is naturally going to change with your elected officials and their priorities. And that makes it a lot easier to make sure that the way that you spend your money is relevant to people at that moment, rather than, and continues to evolve, rather than being set as a policy in stone, because that's not going to work for anybody, because we change over time. I think, and that's the challenge of the social impact. But I do think, as Adam says, think about it as I don't think that the investment side thing is so relevant right now, but thinking about it as that policy impact output part is really important.
Well, I wonder, I'm thinking, one of our fellows at JFI, Jonathan Kanzani, likes to say that, while there are clear and at this point increasingly kind of consensual ways to measure the E in ESG, right? Environmental, social, and governance factors. Environmental factors, we have, increasingly sophisticated tools. Governance, there's, I think, clear principles, for example, the Santiago principles. But the S, Jonathan likes to say, is whatever's in your heart. I'm thinking actually of an ongoing dialogue with Alexandre Gebara from Espírito Santo, about the importance of finding ways to measure the S. Are there any kind of metrics that you think are especially promising along these lines?
So I'll just say that when we did our research, everybody was like, the S metric is really hard and the data isn't there yet. One of our interviewees said, S is where E was in 2016, and it's just really difficult. But that's the kind of bottom line of it. No, there aren't any good ones. But Adam will probably.
Yeah, so I think on the investment side, that's a problem. But again, if we're mostly focused on the policy side, we have all kinds of metrics, right? It's childhood poverty, it's jobs, it's the quality of housing. I mean, you deal with these metrics all the time. So again, I think what's important is not to reinvent the wheel, right? Someone always wants to come up with a new metric and a new kind of scoreboard to do things, but we know that, how many people are in poverty? Are people hungry? Do they have a roof over their head? I mean, how many people are working? I mean, these are very simple things that should be the focus of most policymakers. And we know how to count them. Brazil should have really good statistics, and that should be the focus. There's no need to look for some fancy number. Just focus on the basics.
Well, just to remind the audience, we'd really love to have questions and participation from you all. So I'm going to ask another question, but do be collecting your own, and we'll open up for questions from the audience in just a moment. So I'd love to turn kind of specifically to some of at least what strike me as particularities of the Brazilian context. So coming from abroad, it's really striking, for instance, to note that here the Selic, right, the interbank rate, is extremely high historically, right, and that the accumulated return on the interbank lending rate is, I believe, the highest in the world. I think this could be argued to help to drive concentration in the financial sector, to disincentivize private investment. Additionally, I think the kind of political context where individual public servants are often held accountable for what elsewhere would be understood to be kind of collective decisions, creates a really striking kind of risk aversion and a kind of sometimes exaggerated personal accountability on steroids. So I wonder, considering these kind of sort of unusual political and political economic considerations, are there kind of aspects of best practices developed by other funds that may be more or less applicable here, given some of these conditions?
I think so here in Brazil, it's subnational funds. Now, if we think of places that have subnational funds, the United States has the Alaska Permanent Fund, the state of Wyoming has a fund, North Dakota. And for these funds, they live in the ecosystem of the United States, right? So they have no problem investing in New York capital markets. The financial system works for them. Incidentally, states like Alaska are net recipients of federal tax dollars, right? So even though they like to think of themselves as very free and libertarian, and there's still a lot of money flowing into places like that. So that's why models like the Alaska Permanent Fund, which is good for thinking about savings and whatnot, it's not really a developmental tool. But I think it's, again, not knowing exactly the kind of regulatory framework or environment here in Brazil, but from what I've heard over the last couple of days is that there's a lot of constraints on what municipalities can and can't do with accumulated financial reserves. And it seems that, from the investment function perspective, there's a lot of limitations that kind of disincentivize setting up a sort of separate entity. But again, maybe that's an opportunity, right, to set up find a way in the institutional kind of legal framework to set up something different. And that's where, there's been arguments on the establishment of strategic investment funds in emerging market economies, where even though there might be a national development bank or, relatively, an existing kind of private sector banking system, if there are instances where those might not be working, and so governments have set up sort of these islands of excellence, these new institutions to try to break and get around these. Now, I don't know if that would be possible here in Brazil, but that's why I think thinking about what you face now, it's more how do you keep it simple and focus more on the public policy side, the kind of fiscal reserves management side, rather than trying to create some kind of more interesting or more kind of sophisticated financial institution, which again also comes with risks and is costly, right? So if you want to set up something that's more active as an investor, you have to pay for that, and it's to make it work, right? You have to set up an institution, and if you don't do that, you can lose money. So that's why it's always better to keep it simple in the first instance.
Yeah, no, I agree. And I think there's another, on this point, I think it's really important that I've come across times where there's been, there have been countries and states, they've been very keen, they desperately want a sovereign wealth fund. And either the legal framework or the political environment has meant that that's been really difficult. And what they've done is they've compromised on legislation, and they've done what we call in British English a fudge. So they've made a compromise. The legislation around the institution isn't clear. And in the case I'm thinking of particularly, this first came onto my table when the people who do the account said, well, we're the central bank, and we account in IFRS, and the government that own it account in local accounting standards, and they're not the same. And this then leads into it's that basic stuff. And I think it's really important from a governance perspective that, as Adam says, it's much better to work within what you can do and keep it simple than try to be overly ambitious and having to do something that is going to be either really controversial or people aren't going to like, and then the legislation is poor. And as soon as you get that lack of clarity in either the mandate or the governance structure, lawyers can unpick this stuff, and this is bad. So I think it's really important that looking at what you can do and really being very clear that, you will have a very clear legal framework, and you know who owns it, and you know what the mandate is, and you know where the balance sheet sits, and all of this stuff. Do it within what you can do, and don't try and create, as Adam says, don't try and create something because you want a sovereign wealth fund. It's really important that the money is looked after well for future generations. And the other thing I think that it's a related point, but I did want to get it in, is for years, sovereign wealth funds have been good because inflation has been low and interest rates have been low. And if you wanted to make money, you couldn't just park it in US treasuries and sit there like you could do before 2008. That is no longer true. So maybe, actually, if you've got a very high interest rate in local markets and it's keeping up with inflation, maybe you don't need to do anything fancy. Maybe you can just park it and use that money. That's fine. But so I think that this is something that we've really noticed, and sovereign wealth funds are really struggling with, is for years they've gone interest rates lower for longer. How do we diversify? How, we're going to have to take more risk, blah, 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 to get higher returns. And actually now we're having to dial back that risk because interest rates are going up and inflation is high. So I just think that I really echo what Adam said. Focus on the policy and try and work within the frameworks that you have and you can, because if you do have higher local interest rates, you may not have to do anything really fancy with that money.
Well, so we received a question from our kind of virtual audience that actually dialogues really with a question that I've been hoping to pose myself, which is, the funds, here in Brazil are quite new, and I was eager to ask, if there are considerations kind of particular to this stage of capitalization that they're in, that you think it's worth signaling, and to kind of bring the internet question into it. How can we harmonize the short, medium, and long terms given the social urgencies and the demands to diversify the local economy at the same time that we can assure, financial returns to the funds?
Yeah, so I think, again, it's in the case of Brazil, that's why, to reiterate the point about Norway was rich before it became rich. For Brazil, again, it's about thinking about how long are these resource revenues going to be here? What are they going to look like? And doing some sorts of scenarios around that. I'm sure that's being done. But saying, okay, how much can we expect? And how much of these revenues can we use sustainably now and over the kind of medium term, right? So how can we make sure that these are investments that are made that have lasting value, right? So an example we can look at is in Botswana in Southern Africa, which has revenues from diamonds. And the way Botswana, which receives royalties for its diamonds, they have a kind of a model where they utilize these revenues, but the revenues cannot be used for recurrent spending, right? So they can't use the revenues for paying for civil servants' salaries. They can only use the revenues for spending on education and healthcare effectively. And that recurrent spending, that has to be funded through regular taxation. So I think it's about finding that particular model where, yes, you can utilize these revenues now, but you have to be able to show how they're being used for the, let's say, the social impact of it. but you have to know, again, what's the nature of the revenue? Is it going to get higher? Is it going to go lower? And how do we create that stability?
Yeah, and I think particularly in the case of oil revenues, as Adam says, there's a relatively established, you adapt it, but there's a relatively established way of, as Adam says, that's interesting, modeling oil revenues over time. And there's what we call, and this is kind of one of the most important things about oil funds, is your fiscal rules, or your saving and spending rules. So how much can you spend just through the budget now? How much can you save? So for lots of funds, they save, so if you look at Kuwait, 20% of the oil revenues go into their Future Generations Fund, which the government can't catch, and then they have a general reserve fund that they can spend out of. But you have to, that is not, there's no kind of one rule that because Kuwait does 20% of oil revenues goes into our savings fund doesn't mean that that's right here. Kuwait's a very, very, very tiny country. So you may be able to spend more, but having a very clear idea of what is understanding what you can spend effectively now, saving or putting that other part away. And then the other end of it is, in what circumstances can you take money out of the fund? So lots of oil funds say that we will give 3% of the revenues of the fund to the government to spend every year. That's kind of that's Norway, that's Timor-Leste, it's a really, kind of established model. But that is, again, there's lots of cleverer people than me who can do the maths that will give you what's right in your circumstances. But I do think it's incredibly important for commodity funds to know how much money goes in under what circumstances and how the money comes out. Because as soon as you don't have that clarity around, particularly about the spending, suddenly politicians can make sure that money there's a crisis and we need to spend that money on something that apparently needs spending on. So I think it's very important that as you go through, if you decide to go down that route, is in what circumstances and how much money goes in, and in what circumstances and how much money comes out. And there's lots of good examples of how that's done. But again, just because Norway or Kuwait or whoever does it that way doesn't mean that it's right. It all has to be completely bespoke to the circumstances.
But that's why I think looking at what Chile does is an interesting model, because so Norway's savings model is effectively, it favors longer term savings rather than spending today. And that makes sense for Norway, because Norway has a slightly shorter time horizon in terms of the resource revenue, and they already have high taxes and income, so they don't need, they still use a lot of that revenue, but they have high taxes, and but the Chilean model again is more where what the government is able to spend of the copper revenues is contingent on the modeling of what they think the price of copper is going to do over the next 10 years. But there's very specific, and they have a balanced budget rule, and they have various kind of fiscal policies that limit how much the government can spend, and also considering the absorptive capacity constraints of these revenues in the short term.
Can I ask, have they done well modeling future copper prices?
So the way that the Chileans do it is they have a panel of experts, of kind of well-known Chilean economists that, again, in the case of copper, which is slightly different from oil, is that, Chile is one of the biggest, producers of copper, right? So they kind of are the Saudi Arabia of copper. So they have a better sense of what the market's doing because they are kind of the market, right? So for them, it's easier to model those prices. Whereas oil is a very different commodity. It's much, it's more volatile, and for Brazil to model, the revenues you're going to get, I think that's quite difficult. But again, I think it's probably better to be conservative on how much you can spend, knowing how volatile it is, and that we are in an energy transition, and there are new technologies that are becoming competitive with oil and gas. I mean, we'll still need oil and gas for a long time, but Brazil might not be the most cost-efficient producer, right? Whereas Saudi Arabia and many of the Gulf states, they can produce oil and gas for very, very, very little. The cost of production is very small, whereas a lot of the Brazilian resources, I mean, these are deep water, it's expensive, risky endeavors that figure into the cost of the revenues that you would get.
And just kind of, I think the other thing that's really good about the Chilean model, which we haven't really talked about, but while we're talking about it, is the really good thing about Chile is because it's simple, but it isn't human resource heavy. Their team is really small. I think it's 3 or 4 people, and they're all in the Ministry of Finance. And so because of the way that they do it, not only do they all the things that we've been talking about, but it's a very accountable low cost model. And if we're looking at going back to our point about accountability and transparency, you're not then spending a lot of money on staff and asset managers that is going to be challenging to justify. So actually, I think that's just something I know it's slightly off topic, but I did want to point out that that is another reason to look at the Chilean model as well.
Thank you. Well, I think we have a question from for Fernando. Perhaps we could get a microphone to him, and then we'll take a question from Lena as well.
Well, first of all, thank you very much for the conversation. It was amazing, and for sure, take for us some light for what you do in the future. I would like just to make a comment and maybe a question for you that it's related to the staff thing that Victoria just said. The first comment is that as it's a subnational, we have subnational funds, not a national one. They don't control at all the monetary policy or the fiscal policy or the exchange rate or whatever. I mean, they really need to make manage that research that it's finite. I mean, it's not a perennial one, in the way that they don't control almost anything around. So for me, that's the comment. The most important thing is how to transform such a revenue that it's just momentaneous and depending on prices that they don't have any control, in something perennial. So you have to address social problems directly, and even you have to dynamize the economy to make that those revenues become a part of the budget of the state. So I mean, it's not just maintaining the fund with returns and etc., but put that revenues inside the budget again. So I mean, that's in my opinion, the biggest challenge that we have. The question about the staff is, as we are subnational, of course, that the bureaucracy and the staff are, I mean, just really few people doing many things. My name is Fernando. I am a researcher of our forum. So that's why my question. How can we help the bureaucracy to develop specific skills to deal with that? I mean, we are in UF, it's the university, so I mean, we can have more time to think and etc. And we really would like to help all that bureaucracy to develop, but in the right sense. I mean, they can be few, but they probably has to have those skills, or even our forum can be that space, that hub, to help to design policies and etc. So I would like to ask, which skills do you think it's more important, and how we can do it in our case, in our specific case?
So on your point about staffing, I think there are a couple of things in this case, as I understand it, and I'm always willing to be corrected, is that I think that there's a couple of things that there is I think the policy side of thinking about what you want to do with it, I think that that's probably that you have those skills, you understand what needs doing, as Adam was talking about, what the needs of the municipalities and the states are. I think the challenge and where the skills come in is in the investment piece. And I think it's really important to think about it as it's about understanding financial markets and investment, even if it's very simple. It's, there are no sovereign wealth fund secret sources. You see these courses that are sovereign wealth fund specific. All of my members think of themselves as financial investors first because they're established and their governments have gone through the conversation we're having now in Brazil, right? That's done, it's been decided, we know that. So they think of that themselves as financial services, financial investors. And those are the skills I think that often when we get to this point are lacking. And my advice is, if you need to hire some people, make sure they understand financial markets. Central banking, people with central banking experience is particularly useful, right? So I think that is there. Sovereign wealth funds don't need any specific sovereign wealth fund training. They just need people who understand policy and people who understand finance. There's nothing. You don't need anything else. So I think that in terms of what skills do you need, I think just making sure that when you get to that point is having someone who understands the investment side. And central banks are often a very, very good source of especially if you're talking about keeping it simple, keeping it within what you know and what you can do. Those central bank experiences are really good, and potentially working with a central bank to find people would be where I would start, honestly. I think that's important. Adam, do you want to take the first one?
But going to Fernando's first comment, I mean, this is, I think, a big challenge for the funds here, is that they are subnational, and not simply just subnational at the state level, but they're also at the city level, right? So that's where you have no control over of fiscal or monetary policy here in Brazil, right? So that's, and when you look at models like Chile, it's an integrated natural resource revenue framework at the national level that is integrated into fiscal policy and very much aligned with the monetary policy dynamics of the country. In your case, that's all impossible, right? So that, on the one hand, it limits your ability to shape kind of the conditions around you to work. So you're very limited in terms of what you can work with. But I think then what that requires, and this is why I think the having this forum is excellent, is that you'll have to come together and share experiences, and you'll have to utilize the amazing services of Fernando and his colleagues at the universities to help you think about, okay, what are the economic conditions in Brazil as a country, and Brazil in the global economy, and what are the opportunities that you as a municipality or the state, in terms of saving these revenues, in terms of some sort of financial policy, but how do you kind of manage these over time? So I think it's that dialogue, and that's why it's really great to see that this initiative is going forward, because that information sharing and that the lessons that others can teach you about what to do, I think is super valuable and will be super valuable going forward. But again, also having a good kind of research component to do that kind of out-of-the-box thinking, or the research that you can't do on a daily basis when you're in the bureaucracy, as it were, in the civil service, doing your daily job, trying to just manage these resources. But how do you think in terms of what do we do in 5 years' time, or how do we set this up?
I'll just add on to that as well, and going back to a question that Paul asked me earlier about using money to diversify the economy. I think it's always at a local level you have a kind of idea of where your economy is what your USP is, where your competitive advantages are. And I think that there's always a case of if you want to use this money directly, is to play to your strengths, you know, kind of pick things that you want to develop, like, as I was saying with Abu Dhabi, going, hey, we're going to do repair and, you know, we're not going to build planes, but we're going to repair them because, hey, we're right in the middle of the world and everybody flies through Abu Dhabi or, you know, the Gulf at some point. And so it's thinking, I think, about if you do want to use it to diversify the economy, what are your competitive advantages? Where can you, if you want to put money into building industry, but I do go back to, having said that, I go back to Adam's point is think about the basic needs first before you start doing that. But I think that there is an opportunity if you wanted to, and if it was, you know, expedient to do so, to actually think about how can we use it to build industries. So in Africa, for example, a lot of, you see a lot of the funds think about not only building infrastructure, but thinking about actually we need to build healthcare, or actually what we need to do is agri-processing because we need to add value in our, you know, we ship everything out raw, actually we could create jobs and that kind of thing. But I think start with what Adam said is, right, basic needs met, basic policy needs met, and then you can think about, do we want to, you know, catalyze industries or build certain types of infrastructure, or, you know, however you wanted to do that. So I think that's another potential angle to think about, but start with the basics.
Excellent. I believe now we have a question from Lena Levinas. And if I may just say also, please feel free, anyone in the audience, to pose a question in English or Portuguese. I'd be very happy to translate into English.
Thank you so much for your presentations. I learned a lot. I have a very superficial understanding about wealth funds, sovereign wealth funds. So the more I learn from you, the more questions I have, of course. And so I'd just like to highlight two issues. If we look at Latin American countries, we've been trying to overcome extractivism. And in Latin America, these funds cannot be built on anything else except lithium now, because this is the new commodity that will be emerging soon, or coal, or oil, gas, and also commodities, agricultural commodities, as we know. This is extractivism, okay? So the question is, how can we build a sovereign wealth funds incentivizing, pushing further what is really a big problem for our countries? Because this is the big issue. We have deindustrialized Brazil. It's not only because, you see, we have the 80s debt crisis, etc., and then the opening up of the economy. It's because our integration in global markets is determined by this. And now we have China, and now we have lithium, and in this green transition, it's going to be exactly the same. So I think this is a big, big problem, and because this is a strategic issue, and we don't want to deal with this anymore. And there are lots of activist movements, social movements in Latin America now that thinking about this just transitions, they are trying to challenge this way of doing things. And so I think this is important to address such an issue. So my second point, it's just comments. You mentioned the Chilean sovereign fund. I don't know anything about this fund, but I know a little bit about Chile. So Victoria mentioned good public spending and that they were able to, but look at Chile. Okay, that student debt, huge. One of the highest in the world after the United States, and even and after, because exchange rate not as big as the UK one. But hospitals, all financialized. Look at household debt to income, disposable income ratios, the highest in Latin America. So what happened is that over the last 20 years, 25 years, started bigger, but the Chilean social policies have been highly financialized. So I'm not sure that this fund could reverse the trend, because my point is, if we have to depend on financial markets who dominate the world, and if we want to overcome financialized neoliberalism, we have to find another strategy. Because, you see, in terms of political economy, we need a radical shift. We need a break. Because otherwise, things, sorry to put it in these terms, but it's so interesting what you have addressed here, and you see, because I think that we are just in the middle of, you see, we have foundations like the Hewlett Foundation, the Ford Foundation. They are discussing how to reimagine capitalism because they agree that neoliberalism has been extremely destructive, increased inequalities, etc., everything we know, okay, and also contribute to the rise of the far right worldwide, okay? So, what is the world ahead? It has to be, again, supported by big finance. Because look at all those investment funds. I would like to know the relationship between the sovereign debt funds with institutional investors. I suppose there is a huge link, of course. So we are contributing to strengthen the logic of finance. So Victoria mentioned, because we have adopted, you see, the finance logic metrics and instruments, this is what Eva Capello calls the colonization of public policy in general. Huh? It has been colonized by finance. But we are doing the same. So the point is, countries like Brazil, where we have a social protection system, and where it's not, I don't know anything about the Abu Dhabi Wealth Fund, but I suppose there is no social protection system in Abu Dhabi. So I understand that they need something to provide protection, basic protection in the future. This is not the case here. Everything is being dismantled by the financial sector. And that's the point. So you see, Brazil is a highly financialized economy and society today. And so the point is, to what extent, and if I think about the idea of what is going on now with this energy transition, the climate transition, everything. More than ever, because they have liquidity, the financial sector is there to provide the funding for this transition. And of course, they will go to developing countries, for instance, to say, okay, let's improve here like the social impact bonds, improve housing, things like this. But we know how they do this. There is a lot of literature on this already that shows that they come and then they establish that during the implementation of the construction of a hospital, you cannot increase wages, okay? It's so wage control, and then social movements control. There is a lot of coercion. So what is the price of having a hospital like this? Because we create these funds, and then we're going to hire institutional investors to provide the infrastructure. So I'm not clear that I make, because the problem is to what extent these funds can really contribute to help us overcome the dominance of finance in capitalism today. So I think this is strategic for our developing countries. Thank you.
No, I mean, what you say I think is completely, I mean, I understand it. I go to academic conferences and this is what we talk about, just like that. But, so in the case of Chile, it's very interesting, right? Because it is, you know, the neoliberal poster child of the Chicago School and we know what we saw over the last few years in Chile, this you know, major, massive social protest. And before that, you know, Chile was always kind of politically stable and but I think it's possible to separate out the kind of the political economy within the country from how you manage these natural resource revenues, right? So in the case of Chile, you know, having a sound natural resource revenue management of the copper revenues is something that, you know, is important irrespective of the distributional questions within the country, right? So having a sound way of managing your natural resources doesn't mean that you have to have privatized universities, healthcare, everything in Chile, right? I think you can have a more socially productive one like Norway, right? So Norway, again, is very egalitarian, but they have $1 trillion of an oil fund that, I would agree with you, reinforces financialization of capitalism, right? But the other example in Latin America is Venezuela. The Chavez revolution looked really great for a while, but, and there's other issues with that. But, I remember people saying, in Venezuelans I would talk to is that, we're so rich in oil, yet we don't have a proper functioning highway from the airport to downtown Caracas. So I think whatever the case is, you have to think about how do you manage those natural resource revenues, even if you are doing it it has to be sound, regardless of the political economy that you want to have, right? If you want to have more social distribution, which I think is good, then, how do you pay for it over time? Because you still, again, so I think on the one hand, we are still within capitalism and global capitalism, right? I'm trying to think how to give a response for this audience, right? That is not too academic, but in the sense that there's, I think, policy decisions that need to be made that focus on the simplicity and the realities of the volatility of natural resource revenues. And if I would agree, are there aspects that will lead to more financialization? Possibly, but not necessarily, right? So you can think of, do we need to have capitalized pension arrangements, or should we just have pay-as-you-go pensions? We can see across most pension systems, they've financialized, and what has that got us? But I think I would challenge you on financialization as necessarily assuming that it's the financial sector that is leading to the hollowing out of the state and social services. I think it's too easy to put the agency on Goldman Sachs and the financial sector when actually I think it's democratically elected governments in the West that have deregulated and privatized. And I think it's failure of democracy to elect the right types of people to do it, because it's a broader conversation that I think we could have afterwards.
I'm conscious of our time. I know we're coming up against our limit here, but there is one last question that I am committed to asking Victoria. Of course, we're very lucky to have the Director of Strategy of the International Forum of Sovereign Wealth Funds with us today. And so I'd just love to ask if you might say a bit about some of the benefits offered by the International Forum to its members, and about possible ways for Brazilian funds to engage individually or collectively.
Thanks. General plug. I mean, goodness. So I think the most. We do lots of things, but I'll break it into three. The most important thing and why we were founded was around promoting good governance with sovereign wealth funds. So with the Santiago Principles, all our members have to. They are voluntary. We know this, but they have to. They sign our membership agreement and say that they will implement these principles. We do not talk about compliance. It is implementation. And the way that we do that is through a self-assessment process, which is part of the membership process, but it's an ongoing process. So we ask members to do that every 3 years. We read them all, we give you feedback. And I think it's really important to understand that with that is that going back to this point about every sovereign wealth fund being unique, it's mostly about are you implementing this principle in your in your context, and we ask you to explain how you do that. And what that does is it provides, I think it's a really good exercise for sovereign wealth funds themselves to understand their own structures and how they work and their own governance, and understand where changes and improvements need to be made. But what they also provide, which I think is going back to the point around accountability, is that they're all published on our website. So anybody in the world can come and have a look and read from you an accurate view of how you are structured and governed. And I think that this is an incredibly important tool. Do people really do that? No, but if people ask you, you have a public, independently verified document that tells you this is how we are structured. So I think that is particularly for new funds, I think that is an enormous benefit. And what we can also do is, as we go through the kind of membership process, we can one of my main roles is introducing, people ask me questions saying, Victoria, we're rethinking about the way we're looking at how the board is structured or who's on the board. And then I can then put you into contact with people who might be relevant, because I kind of know, because I've got an understanding of the sovereign fund. So at this stage, I think that is the main benefit that we offer, and that networking of being able to kind of integrate with other sovereign wealth funds around the world and learn from them. That's really important. I mean, we do lots of online and offline events during the year. And we also, the other thing that I think is a large part of my job is what we call representation. So individual sovereign wealth funds can only talk about themselves. What I can do is talk about sovereign wealth funds as a group, and we have a kind of policy that we don't really talk about individual sovereign wealth funds. I tend to talk about them as a group. So, I mean, always welcome to talk about. You just have to email me, and we can set up that conversation. That's the easiest way to get in touch. My email address is on our website at the bottom of every press release, so it's there. The other thing I think is that we like collaborating with other institutions. So if we work with, there's a group of sovereign wealth funds called the One Planet Sovereign Wealth Fund Network that looks at how they implement climate change. We work with them very closely, we collaborate with them. So we're always keen to collaborate with other groups so that we can pool knowledge, because I've learned so much this week about Brazil, politics, how you're thinking about these sovereign funds, and it's been fascinating. The whole lot of information I didn't know before. And equally, I think that the pooled knowledge of our 46 members can be a really powerful tool for you as you go on that journey. So being integrated into that global, either as a group on an informal basis or as associate members or full members, I think just provides you with just so much more access to knowledge that prevents you from going through Google and just finding stuff, right? You can come and ask and we'll put you in touch with the right people. So, and just we can genuinely support you on the journey, hate that word, but on that process to kind of working out what you want to do, how you want to do it, and providing you with the necessary support. So that's the main benefit for this group of institutions.
Well, thank you so very much, Victoria and Adam. I mean, speaking of learning, my goodness, I feel like I have just gotten a semester's worth of material in the last hour and a half. What an incredible pleasure to have you both here addressing our questions and dialoguing over the last several days. I hope you can all join me in thanking our two panelists, and I hope we can continue the conversation.
As well as thanking Paul Katz for such thorough moderation of this session. Thank you as well. I would like now to invite the three of you to take your seats back in the audience.
So we go back to English. In the next session, we'll be talking about the need for regulatory framework for sovereign wealth funds. To moderate this session, we'd like to invite the economist, consultant, and public policy researcher, Bianca Carrasco. So we'll continue. moderator, please. And in her name, we'll continue inviting the economist and president director of the Tax Advisory Office of the Legislative Assembly of the State of Rio de Janeiro, Mauro Osório. And the professor of law of Fundação Getúlio Vargas and law researcher and association tributation researcher, Leonel Cesarino. Our dear moderator, the panel is yours. Good morning. I'd like to thank you all for your presence here today. Thank you so much, Leandro, for the invitation to moderate this panel, and thank you to the forum team. So the theme of this panel is the need of having a legal and regulatory framework for sovereign wealth funds. Thank you for your availability and interest to our guests. I'm Bianca Casasco. I'm an economist. I'm very glad to be here in the Institute of Economy where I graduated. I'm a researcher of public policy, and I was part of the management team for the Sovereign Wealth Fund of Niterói, where I was able to see some of the issues that we're going to be talking about. I'm a white woman, tall, thin, wavy black hair. In this panel, we're going to discuss some of the challenges posed by the absence of regulation, which actually accounts for sovereign wealth funds and their specificities. Today, there are no fiscal regulations or regulations of use or financial application of these resources and of other mechanisms that provide more security and perennity for public managers. In practice, what we see today is a regulatory scenario that's very diffuse and pulverized in the practical experience of these sovereign wealth funds. They try to find their own way to seek balance, control, and legitimacy for their policies. So to talk about these challenges and reflect about possible pathways for institutional strengthening of these funds, I have the honor of presenting our dear guests, Mr. Mauro Osório. He's an economist, President Director of the Tax Advisory Office of the Legislative Assembly of the State of Rio de Janeiro, ALERJ. And to my left, Professor Leonel Pessoa, Professor of Law in FGV São Paulo. He conducts research on law and the tributation of civil society associations. So afterwards, we'll have the chance to ask them questions. And I'll pass the floor to Professor Leonel. Thank you so much. Good morning, everybody. Thank you for the invitation. Thank you to Fernanda and the whole organization. I'll try to organize my presentation first by conducting a brief overview of a debate that at least in 2008 to 2012 was a debate in the US about the regulation of sovereign wealth funds. And then I'll point out some of the issues we find here in Brazil. And given my experience, I've seen that the municipal wealth funds, sovereign wealth funds here, their income comes mostly from oil. However, some sovereign wealth funds are being created whose income comes from mineral activity. So I'll point out some of the specific challenges from mineral extraction in Brazil. As it was said in the previous panel, sovereign wealth funds were in place since 1953 when the Kuwait ones were created, and in the last 50 years there were already sovereign wealth funds. So Abu Dhabi, Singapore, Alaska. But things have changed in the last 20 years, in 2008. So the number of sovereign wealth funds grew a lot, and the investment of these funds grew exponentially. The resources can be allocated in various manners. And given that change, sovereign wealth funds started growing, and they also started changing their profile. Before, they invested in securities and they became more aggressive in their investments. They started investing in private equity and in participation. And this new investment profile started generating some level of concern in the academic community and in the international community at large. And the debate on the regulation of sovereign wealth funds has a lot to do with that concern. At least this debate that I told you about in the US during this period from 08 to 12. So what type of investment was that? The Abu Dhabi fund bought a large percentage of the Citibank stock. Another fund purchased another. It bought 8.1% of a chip manufacturer that has contracts with the Department of Defense of the US. A Chinese fund bought 10% of the private equity fund, the Blackstone. So that has led to, first, a concern on safety, on security. However, in 2008, FINSA was created, the Foreign Investment National Security Act, because before that, there was an attempt by the PAI to purchase the ports of the United States. After that, an act was created in order to regulate what a sovereign wealth fund could do so as to not affect the national security of the United States. So that was at first. It was controlled and then it became no longer a point of conversation. Afterwards, it became a concern that as the funds were purchasing private equity, they could be acting strategically and politically in a way that with that purchase, they don't want to maximize their profits, but behind it, there's a disguised intention of developing the economy of countries that had those resources. So Abu Dhabi purchases a participation in Embraer and attempts to stimulate the directors of Embraer to make an investment that would not benefit them directly, but could generate jobs in the Emirates, or that would stimulate Embraer to transfer technology to Abu Dhabi, to a specific company there. So that type of concern, which was in our radar, when this debate started coming up on the best way to regulate sovereign wealth funds, I can say that in the US, three main schools of thought were generated. One first group, headed mainly by the professor from the University of New York, Richard Epstein, he advocated for that nothing new would be necessary in terms of regulation. The existing legal framework would account for everything that was necessary. Another school defended harsher regulation. Some representation of that group are the professors from Stanford, Judson and Milhau. And another group defended a regulation which I will call mild, which originated the Santiago Principles. Out of these three types of regulations, first of all, I would like to... Oh, it's up here.
So you can go to the next slide, please. It's not working. It is very quick. You can move to the next slide, please. One more. So what did they say? I think I'm going to stand here. So there are three arguments. Why should we defend that the capacity of the legal framework is capable of dealing with the regulation and we don't need new regulations? From the sovereign wealth funds performance perspective, they have two arguments. If we are going to analyze the current investments of the sovereign wealth funds, we are going to detect that they are long-term investments, and we can expect that they are going to keep the allocation despite the long-term losses. They are not speculators, they are investors that are willing to maintain their positions. Besides that, they used to say that they usually use private managers that are well known. On the other hand, they wondered what is the example of this work, this strategic work of sovereign funds that you can recommend to require a better regulation. I remember that we were talking about the Gazprom, the Russian gas company, as a potential example, but because it had acquired strategic positions in Eastern Europe. But the main argument is that the regulation, the current regulation in the United States, the Security Exchange Commission, that corresponds to our CVM here, forecasts the punishments in case of a fraud or a bad behavior of the sovereign wealth funds, or the equivalent to the CAD there, also make sure there is a legal framework enough to prevent any conduct with the objective to interfere on the free competition. So the legal framework, the American legal framework, has enough devices to avoid this type of strategic behavior. And besides that, if you want to create additional barriers, you might be interfering in de-stimulating the sovereign wealth funds to bring wealth to the country. So the objective is to stimulate, the capital is welcome to leverage investments and many others. So any additional regulation can go to the opposite direction. If you go to the next slide, to the defense of a hard regulation, I'm going to contradict two types of elements that comprise the law. Kelsen, the theoretical of the 20th century, he had as the main goal to identify the law as a norm. So what is the law? The law is an act, is a norm, and in order to identify the norm, we have one fundamental element. Every norm has a fundamental structure. It encompasses two elements: the description of what can happen, a description of a factual situation, and the second part is a forecast of a sanction in case that situation comes through. Every norm has this structure. You only have the right if you have the norm. You only have the norm if you have a sanction. So you will only have a norm and a law and the capacity to indicate the law if you have a sanction. In this sense, it would be critical if we had to regulate the sovereign wealth funds. We needed to build a legal framework, a new legal framework, capable of account for new situations that would be brought by the sovereign wealth funds. And some of the attempts were proposed. That the sovereign wealth funds can only be act through financial intermediaries, that the sovereign wealth funds can only invest in a certain type of a funds with a global index, or if they had disclosure norms. We had the Santiago principles, the disclosure principles, but the norms in terms of they should be forecasted sanctions if that disclosure policy is not undertaken. So this would be an example of a hard regulation. Third, we have a defense or a mild regulation. What is the defense of a mild regulation? In 2008, IMF In October 2007, IMF started the discussion in order to identify a set of best practices that could regulate the activity of the sovereign wealth funds. So since, as I said, for Kelsen, we identified the law as one element. The law is the norm. But throughout the years, we can see today that besides the norms, we have another fundamental element that comprises the law. The law is the norm and the principles, and these principles need to be used many times by the judges to decide and define many things. So there is a different attitude in terms of the identity of what law is. In this second position, it's law and principle, and these principles can perform an important role in the regulation itself. So what does the law have? It does not have the sanction, the coercion element. So it is a proposal, a different proposal of regulation. They started to be thought of when IMF started the discussion to identify the best practices. And the work of the IMF resulted in the Santiago Principles that were established in 2008. So an example of this type of principle. The purpose in terms of policy of the sovereign wealth funds, it has to be clearly defined and publicly exposed. So you're not forecasting a sanction, but you are establishing a principle. If the fund adheres to this principle, you have a degree of trust. If you have a hospital, if there is an ISO certification, it's different from not having one. So I think that this was the debate that was organized in the United States in the beginning of the 21st century. 3 forms of regulation, and the fear that this is more applicable not to the Brazilian sovereign wealth funds that are being built, but the large sovereign wealth funds from the Middle East. This is the fear that they could invest in a strategic way in the countries that the investments were towards. Now if we bring to Brazil, I think the principles are something that are important to be used. The sovereign wealth funds that are going to be constituted here can be organized having as a parameter these principles that can adhere here to the organization of Victoria, and because that brings an authorization for the sovereign wealth funds. There is another problem, and I bring to the mineral activities. CEFAM today, the municipal sovereign wealth funds of oil will be the oil royalties. But Fernando told me today that they are constituting other sovereign wealth funds that has as a fundamental revenue the mineral revenues, and Conceição de Mato Dentro would be a municipality that is thinking about building a sovereign wealth fund with these resources. So I think it is very interesting, this initiative, and I have 2 points to say. The first is, today I remember seeing in the news a few months ago that a few municipalities were carrying out parties, and these parties were being made with resources of CEFAM. So the first point is, today it is a no man's land, this regulation. It is not regulated at all, and we don't have precise parameters on how the money that comes from CEFAM has to be used to substitute the mineral activity in ways that other activities in the future can create jobs and leverage the economy of that municipality when you don't have the mining activity anymore. The regulation, as it exists today, ends up limiting the possibility of the municipality to oversee the extraction of the mineral activity. So the Constitution established that the supervision has to be between the country, the states, and the municipalities. And this was going to be regulated by a complementary law that was never enacted. So what happened was the ANM, the National Mining Agency, came and created a law permitting, authorizing itself. It only this institution has the ability to supervise this mining activity. Part of this budget goes to the municipality. The municipality that are the recipients of this revenue cannot supervise this mining activity. And I saw a lot of mining activity. That's the mining company giving less money than they should. So the mining company needed to be inspected and supervised. And I think that the municipalities, if they had all the conditions to supervise that, this could revert in more benefits to the municipalities. So the ANM can shape a partnership with the municipalities. The National Mining Agency does not have staff to handle all the demands of the mining municipalities. We have only a few supervisors, inspectors. If they have a partnership with the municipalities, this partnership has as a rule that every inspection has to be started and led by someone from the agency. Today, the municipalities have their hands tied in the inspection of the mining activity. I think these are my initial remarks that I had to talk to you. Thank you very much, Professor. Now, I pass the floor to Professor Mauro Osório. Okay, thank you. Good morning, everyone. I want to thank you for the invitation, represented here by Bianca. I missed Professor Leonel, and I think he talks about a lot of good things. So we can discuss here today. Professor Fabio had an excellent conversation yesterday, and everyone who is here today. First, it is a joy to be here. I was graduated in this historical building that was a mental institution. So maybe it is still a mental institution until nowadays. But it is a huge pleasure to be here, and we brought, for those who are interested, I'm going to give to Professor Leonel. This is one of the technical norms that we built about the oil and gas complex. I am a professor of the National Law School, but my experience is not in regulation, but in the area of regional development. The National Law School, usually the doctorate is in the Research Institution of Urban Planning, and I am in the Legislative Assembly. Maria Marta is with me here, who is an economist graduated by this institution, and she is working with us in the fiscal part. The fiscal assistance is called fiscal assistant, but it's not a fiscal assistance. It is a group of research about the state of Rio de Janeiro, because initially we had a copy and paste of the independent fiscal institution, and we are discussing how to change the name. When the president, André Ceciliano, he couldn't be here today, unfortunately. 2 years ago, Romário is also the president of the CRB. Romário is representing the Congressman Quaqua, okay. So 2 years ago, André Ceciliano, in the conversation that we had, someone suggested, and he got the model of the independent institutes of the Senate with a fiscal institution with a mandate up to 2024. But when I talked to him, I said, I don't want to discuss the fiscal issue because of the fiscal issue, because I want to discuss the development, and the fiscal issue is subordinate to that. So we are at the House of Representatives since 2019 and participating in many good things. And one of them has to do with what Professor Leonel said. Coincidentally, I was in the room of the president when he was talking to the Secretary of Treasury, and there was a low resource of special participations than what we were expecting. And Andrea said, so let's create investigation of these special participations. And we hired Magda Stambriak to participate, and today she's the director of the fiscal assistance, and she worked for ANP as well, and she's a chemical engineer, employee of Petrobras, and this investigation has as a reporter Dr. Luis Paulo Correa da Rocha, a very righteous and correct congressman. And the conclusion that we got that Petrobras actually apparently was creating this data with other oil companies. So they had a debt with 20 million reais. At the same time, this was the result of the investigation. At the same time, the Supreme Court, this is the good news actually, Supreme Court determines, analyzes and defines that the government of the state can supervise with the National Petroleum Institute. So the National Petroleum Institute does not have the monopoly of this inspection. So the discussion in terms of secrecy of data, etc. And we, after the investigation, we created a course with the prosecutor's office, the Attorney General's office, the technicians from the Secretary of Treasury. So we have a more accurate inspection of these special participations, because what happens in the royalties? The oil royalties and special participations are the platforms that brings more profitability. But according to the legislation, you can discount the spendings in the special participations. And apparently, there were expenses that were for many different platforms. They were being discounted only in one to abate the value of the special participations. So this has to move forward. As you said, in the mining industry, we have a technical team that is not enough. The National Petroleum Agency has a small staff, and this is a problem because some people can think that you can have a public service without civil servants. So we need to have civil servants as a routine in the federal governments or in the states and the municipalities. I think that the city of Rio has an old public structure, and I think that this is a point that Niterói and Maricá has to take into account, has to create career structure. We need to create public tender. We don't have any social worker in the staff of social work in the state of Rio. In our social workers, the youngest one is 65 years old. So we need more civil servants. The city of Niterói needs to enhance the public tenders. The city of Maricá is the same. So we always talk about state policies that sometimes I have a technocratic view about this. But more important than state policy, we need career services and career employees. Because if you are elected, you can change the policies. But if you have a career, and you have it in the foreign affairs and many other areas, you have continuity, we have memory. And this is absolutely decisive and critical. So, getting with what Professor Leonel said, without civil servants, nothing will happen. The civil service is not an industry, it's people. So we cannot have a state or anti-state view. So we are moving forward to this direction, and I'm going to talk about the experience of the discussion that we had in terms of sovereign wealth funds in the state of Rio that was built not long ago, created by Alerj, André Siciliano, with the proposal of Jandira Fegali and Romário, who had a meeting with him. I was in the fiscal assistance, and we created a discussion group with the deans and federal congressmen and the state congressmen, and we are discussing strategies for the state of Rio. The state of Rio has a specific crisis.
We've lost 40% participation in the national GDP since the 70s. We're the unit from the federation that grew the least since the 70s. Unfortunately, we just got the result from the development index, and we moved to the 6th position. So it's only bad news. And I'm the one who has to give those bad news away, and I'm seen as pessimistic. But I just look at the data, which is something that we do very little here in the state of Rio de Janeiro. Because as capital and as the main reference of the country, it's in our history. It was called the University of Brazil after the coup in '64. Anyway, it's part of our tradition. So the idea of this forum that was created in the Tax Advisory Office is for us to try to contribute for the overcoming of this gap, like UF did in the 70s and is now doing again, Universidade Federal Fluminense. So we need to continue discussing across Brazil and the world and expand the debate in general. So based on these discussions that happened in this forum in Alerj, we had the idea of creating a fund so that after the assessment and inspection of special participation increased, additional resources would move to the Sovereign Wealth Fund, about 50%. Part of the royalty revenue as they grew after the creation of the fund, 30% would go to the fund. Whatever is a gain after that, in terms of these resources after the investigation, is seen as debt of the government of the state. And concerning all of the city halls that receive special participation in the royalties, then each state government would provide resources to this sovereign fund. And we had a thorough discussion about whether this fund should be intergenerational, if it should be a savings fund, as it seems Maricá and Niterói are heading towards, or if it should be an investment fund. If you look at the law, you will see that in the document it's more of a savings fund than an investment fund. But today, our discussion and proposal is more along the lines of it being an investment fund. Savings funds remove resources from circulation, which is something that the state of Rio de Janeiro does not need today. We need more money in circulation, especially in terms of structural investment. The state of Rio de Janeiro has a hollow productive structure. Not even oil is here. Why do I make that provocation? Because according to this technical notice, 75% of the Petrobras providers are outside of Rio. And as per the Constitution of '88, the state of Rio de Janeiro, and as a consequence, the city halls, cannot tax the oil institutions. So what we have is merely extraction. Due to the Petrobras policies, after Temer took over after the coup or impeachment, depending on your perspective, Petrobras became a huge oil extraction company. They had a proposal of having a refinery in Itaboraí. And since refining and Petrobras providers are not in Rio, when the oil barrel drops, our GDP grows as well. If it drops, our GDP drops. If it increases, it does as well. Because we only have extraction. If we had refining, since the oil barrel dropped, raw materials grew cheaper if if we had refining, which we almost don't have in Rio. Since we don't, our GDP dropped, and the per capita GDP also dropped. Sovereign wealth funds have to stimulate a diversification of the productive structure of the state of Rio. So we are diversifying the productive structure in terms of our oil and gas complex. We're launching, and you're all invited, a technical notice on the health structure of the state of Rio, which is an important front for expansion. We'll be there at Alejo on the 12th. The great leader of this initiative is a teacher of UFRJ as well, the University of Rio. They'll be there with us. And the idea of productive system is not just about oil industries. I want to include services around oil and all of the activities that synergize with oil extraction and create the supply chain. So in the same way, do it in the industry. In 2006, our commercial deficit was of $1 billion in healthcare services. Today, it is around $20 billion. Our idea is to start producing manufacturing here. Professor Leona also mentioned this, so that we realizes the space that it could go into. So my provocation for this debate is whether funds, depending on the situation, should be only intergenerational or a savings fund to safeguard against the drop of oil barrel prices, or if it should diversify the production, the diversification of production. I love Niterói. I've lived there for some time with my family. But Niterói as well as Macaé, they're sleeper towns, as we call them. Rodrigo Neves would hit me if he were here. It's a middle income sleeper town. It has an university and a naval industry which has seen better days. Maricá is the same. It's very informal. It has expanded. Formal jobs are increasing there. However, induction activities are almost non-existent. These are activities that could generate new income. And as it does, it could generate a tax base to not depend so much on royalties. So I'm also thinking at the medium long term. There's an airport, which I'm not sure if it's already consolidated, that could be used for Maricá pre-salt. There's a port in plans. These are induction activities. Maricá runs on royalties. This is a castle made up of cards. Niterói, well, I remember Professor Claudio Egger has an expression. It was capital, and now there are many state government bodies. A lot of middle class people work there. They're retired. It has a great economic dynamism, and it is also a center of services for the region. The main tax levying sector is the health one, but Maricá has to think about how to diversify its production structure, what could generate new income, to not depend only on royalties. What could I replace in terms of importing that Maricá imports and that is produced in other municipalities and it could produce there? What could we produce in Maricá to sell outside of it into the metropolitan region, which is also a production desert? The port, which is an induction activity. And we have one last discussion, which is controversial, which is tourism. Some people think that Maricá could be about tourism and fishing. Today, Maricá must have around 33 formal jobs in hotels in Maricá. Tourism is a myth in Maricá. Big cities, cities like with 100 million inhabitants, forget it, Fabiano, the mayor. Maricá is not going to not be a sleeper town, so a town in which people sleep and go off to work in another town. Tourism is seasonal. It is informal. It pays low wages. It's a city that the city of Rio, the state of Rio that needed the emergency relief resources that were provided by the government was Búzios, which sees a lot of tourism. So we need to discuss things with a lot of awareness and conduct this discussion of whether the funds need to be intergenerational or how much they should diversify production structure. And in the case of Rio de Janeiro, I have no question that it needs to be mainly focused on investment. If we were to apply that money somewhere, we may get less than what we get in terms of the interest rates. So maybe it would be best to pay the internal debt than to save. However, if we have infrastructure investment, just to wrap up, today 60%, it must be more now, of extracted gas from pre-salt is re-injected because there's no oil pipelines. Petrobras was building Rota 3, huge ordeal. It reached 90%, and though it broke off its contract with the Chinese company, and now for sure, and the next government would not be able to restart it. There's a possibility of Route 4 that we're disputing with São Paulo. São Paulo usually lobbies better. They have history in that state with that. We're advocating for a fourth route to reach Itaguaí, and a sovereign wealth fund could invest because these oil pipelines are expensive. So if oil companies have to build pipelines to bring gas to sell over here, which is less pollutant than oil, they would rather reinject to extract more oil in an extremely short-term logic. So this is also a very relevant discussion. How can we use these resources? How can we diversify our production structure, especially in the state, in a metropolis like Rio, which has very little production activity? Where they do have it is in the city of Rio. You can see there's so many myths about the city of Rio because this is not discussed. Everyone thinks that the city of Rio is a city of civil servants. Out of formal jobs, only 20% is public employees, civil servants. It has a lot of private activity. So this is our challenge. Thank you for the invitation. Thank you for the opportunity. And these are my provocations. Thank you. Thank you, Professor Mauro. So, Professor brought many important contributions about the need of regulating and thinking about the objectives of the sovereign wealth funds with that perspective of economic development and strengthening supply chains, among others. Now, I'd just like to along the same lines, introduce another theme of which regulatory aspects could we think about as ways to have more perennity and more continuity for public policy. So in addition to, how to do, what to do, how can we ensure that these policies are state policies and not an administration-related policy? Okay. It's a bit bothersome because it seems that democracy is bad when we discuss that. I know that's not our objective, but we have elections to decide pathways for that development. So we have to be very careful in order to not be too harsh on that, not be too strict. Oh, we can't use royalties for this activity. Okay, so you can't use royalties for health and education because health and education is basically expenditures. There's diffusion index for tax management, which I think is not useful. If you look at a municipality that is doing it well, like Niterói, It has around 1,500 around it ranks 1,500 in tax management in the country because tax management demonizes expenditures. So how do we propose a sovereign fund there? There's a board. We were able to avoid have the Ministry of Finance to manage the fund because they only want to cut back. We had a forum with the society through democracy, through the expanded debate with society, the structuring of civil services as well. Beyond that, there's the issue of transparency. How can we foster a continuous debate with society about what should and should not be done? So our idea here in our fund and through our constitutional amendment was to establish a board with that goal of participating either in infrastructure or in induction activities, and with that allowing the expansion of tax levying. The state of Rio ranks 10th today. We have a very severe political issue, but our central issue is the lack of revenue. So our idea is how can we have infrastructure investment and induction activities that can generate more revenue for the state of Rio and therefore more benefits for the population rather than if it were just being saved and getting a lower interest rate rather. So our concern, yes, is with regulation. When you create this board and the Act 4 defining priorities, it became crucial. But I think it is even more crucial for us to constantly discuss with society in a very transparent manner about what these priorities are, how can we use these resources in order to think about a post-royalty, post-oil scenario, to have a production structure that we can rely on and not depend so much on the oil revenue. So of course it's about regulation, but it's also about transparency and debate with society so that we can define these. So for example, I was looking at the municipality resources from 2019 to 2021 in the state of Rio. On average, there was a revenue growth of around 30% after inflation. I believe that is SEDAI money. So who knows where the SEDAI money went after privatization? So I think it's all about transparency and not the secret budgets that we've been seeing in the current government, in order to avoid being too strict, because the elected officials and the administration for each state and municipality needs to define those pathways and have medium and long-term strategies, of course, but that could change. We can't assume that if there's no regulation, then the mayor will conduct bad management. I don't think that's a good premise to have. We have to expand our debate with society, constantly stimulate democracy, make it an exercise, and have an open debate in order to actually find new paths for Brazil, for the city of Rio, and for our municipalities.
Excellent, thank you. I'm going to bring a question that was asked through YouTube from Marcelo Anolanding. The question is with the assistance control and the financial exercise of this calculation until the effective collection of the special participations and the royalties. How can ALERJ control the budgets and the financial exercise since the calculation up to the effective collection of the special participation and the royalties? Well, the Court of Auditors has to follow the expenditures of the cities, but it seems to me that the control and the oversight that Petrobras deposits, if I understood the question, it's up to the executive power, not the legislative house. So we can vote laws, we can contribute with investigations as we had in the investigation of the royalties. Now we are investigating the public debt, but to promote trainings, to train people. But this supervision, this inspection, it's not up to the legislative house. Okay, let me just correct. It's because, as I understand the question, that the Court of Auditors, how they control this financial calculation. Yes, I do not know that. Unfortunately, I don't know enough the work of the Court of Auditors, and I think that the Court of Auditors of the State of Rio has to improve, being very honest. Because not so long ago, the Court of Auditors of State of Rio had a budget that it was higher than the Court of Auditors of São Paulo, that has tax revenue 3 times higher, and many more municipalities. That improved recently, but we have to discuss that. How do we invest? How do we supervise the Court of Auditors? How do we audit the Court of Auditors? And that depends on the social debate and the political hegemony. Professor Leonel also brought important points about international contexts and these regulatory aspects, and I want to understand, and I want to hear from you these challenges for the subnational entities, especially regarding the financial application and how these challenges are being put to states and municipalities in Brazil. Let me see if I can add something here. I think that the international debate, I don't know if it can be applied in a way that if the states and municipalities adhere to the principles, they will have a legitimacy and they will have a guideline to organize the money that is being held by them. So I think this is the first point. So the principles is something that we need to practice, and the adherence to the principles is a guide. I think that the problem in Brazil that we have, not talking about the sovereign wealth funds, but talking about the thing, as Professor said, the difficulty to inspect the royalties resources. I think this is the problem of the federalism. In Brazil, since you have a federalism, the Constitution forecasted that we could enact a complementary law that would define how the states and municipalities and the country could work together to inspect the mining activity. And the law was never enacted, so the municipality were out of this inspection. So the agency does not have staff enough. We have only 3 people. There are 3 agreements in the Court of Auditors that shows the deficiency of the agency in the inspection of the mining activity. So it is everything to be done. So the municipality requests and nothing happens. So if we have something specific to do, a problem that we have in Brazil is how to solve this federalist problem in a way to enable and authorize the municipalities that are the main interested in this case, in the royalties of the mining and the money that comes from this activity, that they had an active attitude to participate in the inspection processes, that the design of the legislative framework can give them a legitimacy and the possibility to inspect. Excellent. I will take the opportunity that we have a participatory audience, and I'm going to open for questions now. Thank you. I want to thank Mauro and Professor Leonel for the interventions that were excellent, and I learned a lot. I have a very specific question to Professor Leonel. You said that despite the sovereign wealth funds have been built in the midst of 50s, they grew after 2018 and the investments increased exponentially after that date. So my questions to you is, would you say that they come as an alternative to the austerity policies? Because from 2008 until now, we saw the domain of the austerity policies all over the world. Things got better after the financial crisis, and it improved with the COVID now because we thought that there was a relaxation, an increase of spendings and positive expectations. But between 2008 and now, we had a predominance in all the Western economies, austerity policies. So until what extent we can look at the sovereign wealth funds as a solution to this money that was stuck and the possibility of applying in social aspects is a solution to the austerity policies? Well, thank you for the question. I agree that this might be the origin. I think that the sovereign wealth funds, as Professor Mauro said, that education and healthcare are outside of the spending, there is a restriction. This is something that has to be thought of. Education and healthcare has to be a focus, especially talking about Brazil. We were listening to the previous speakers here talking about Norway in Brazil. Norway is thinking about the future generations. We have a current problem and how to solve the problems of the social problems nowadays. Education and health. So if education and health are considering spending and you cannot invest in health and education, this becomes complicated. So thank you for that question. This issue of education, I was teaching in this last period that I teach in excellent because we had a lot of competition, and with the quotas we still had an important quality. And the classes that I ended, the classes now that are still the finals that I have to correct, there was a sudden change, a sudden drop in the quality. So this pandemic aggravated the problem. So the young people who would pass to the university, they lost their routine of studies. Imagine if the people who are in the outskirts of the city. So besides the structural problem that we have, certainly this problem got even worse during the pandemic. Excellent. Do we have any other questions? Yes, I want to ask a question to Professor Leonel. We have a huge demand for the regulation of the sovereign wealth funds. They need to be regulated. And the idea is that they are regulated in a way that they are not stuck. They can look for financing and they can work with their mission. So using the example of the pension funds, what are the principles that we can follow for this regulation process? Well, using the example of the pension funds, I wouldn't know, but I think the international experience says that the mild regulation in the Santiago principles, they are guiding principles. And when you say demands, my question is demand by regulation for regulation, where this demand comes from? Are you thinking about a specific case of demand? Well, I think that it's easier to start operating with these funds, knowing how to do it and not being active in terms of the Court of Auditors. I don't think we have to control the Court of Auditors. They have their function, and I think it's better to be proactive in this agenda than waiting for them to do that. I think the main differential is that I'm comparing with CEFEM. CEFEM was loose, and you had a lot of money in our hands, of cities that were not using this money to benefit the future generations or to allocate in the expenditures of health and education. So if we transpose the problems of CFN to the sovereign wealth funds, I think it is a legitimate demand. We can think about what is legitimate to do with this money to handle how much money will be available to the municipalities and how can they solve problems. So I am from the city of Niterói, and adding to this question, I think the subnational entities have a lot of problems in the Article 164 of the Constitution that says that the cash should be stored in banks. So thinking about structures, what the RPPS already do in bank funds, in private bank funds, they have the freedom to choose the many different entities, and the subnational entities are afraid of allocating in funds that are not from public banks because of this article of the Constitution. And under many aspects, we can consider that these amounts are not cash availability because they are not thought of to be used in full and only in one exercise. So we are thinking about a legislation to be able to improve this discomfort that the city managers have to conduct and enhance these funds, the governance structures and the applications. So in this factors, I agree with you. You have a negative aspect of the regulation to limit. There is another positive aspect to enable. If you have a regulation that is very clear, you will bring possibilities to the municipalities that so far can not exist or be doubtful. And the doubtful is bad because you are in doubt if the Court of Auditors is going to approve and everything. So regulating positively can open new possibilities. Besides that, this legal gap generates a lot of uncertainties, not only for the managers but for the technicians as well. In the formulation of the investment policies, in the way to apply the resources of the capital markets, we lack references. We end up using, the subnational entities end up using what is already consolidated, as for example the legislation about RPPS, but in practice is that we have a lot of difficulties to have certainty to implement an investment policy, to elaborate these investment policies. Even in the experience of Niterói, we resorted to the mapping of the other funds, to the other experiences that takes place in Brazil, to see how they were applying, how they were coming up with solutions and making sure that was being good to the policies of these funds. Well, I have here the questions from your comments. What were the examples that we take into account to the examples of Niterói? Well, we used the pension funds, the regulation of the pension funds, but the second movement was to make the mapping of the other funds to understand, after the concrete experiences, how they were implementing it. So we were anchoring in these practical experiences due to the lack of regulation that generates a lot of doubts of what can be done, because it's a discretionary space about these accounts and this utilization. Do you have any other question? Good morning, my name is Felipe. I'm from the Conceição de Mato Dentro. We have a whole team here of the city, and we have the intention to put together a sovereign wealth fund in the city. We work with the mining of the iron ore and not the oil. But in Mauro Osório's speech, there were a few points that brought me a certain doubts that I would like to clarify. It was said that, according to your speech, that two main problems with the lack of refineries in the states of Rio and this dependence and the oscillations of markets regarding the oil. As I understood, if we had more refineries, the oil being produced here, it would be refined here without the dependence, external dependence on the foreign markets and the value of the oil. And another thing that you said was about the ICMS tax, that they would be robust values that are not collected by the states. So bring this outlook of Conceição, we have a correlation that I would like to know if in the oil is the same. I'm going to defend our mayor that was already a federal congressman about the Candir law, and it is a defense that shows a deficit of the states regarding ICMS taxes. And this is also a deficit in the national industrialization, because you exempt the export of the iron ore, however you have a local industry, you collect the ICMS tax, so you do not industrialize the country, you exempt large tax that can save the state of Minas with their debts. I don't know how it works in terms of Rio. So my question is about the refineries. This would be similar to the iron ore use if this is real. We can struggle to exclude this Candir law. This would be a benefit to Rio in terms of tax collection, and also in the industrialization in the case of the refineries, to attract refineries to the state of Rio, solving two main issues, not being dependent on the oscillations of the oil market. I don't know if it's the case of the refineries, it would be the same thing. Selling to a refinery here, we would pay this tax, and selling to a refinery outside of the country, we wouldn't pay this tax. So I think we could mobilize the states, both in the oil and the mining sector. We can pressure the federal government so this law can be extinct, and we can acquire two benefits. That's the national benefits about the oil, and a tax collection that would bring a lot of benefits to all the Brazilian states that work with these two activities, both oil and mining. So I just want to clarify this. Okay, let's go. The Candir law was created in a very diversified, a very different situation. It was in the Fernando Henrique administration, that it had an international fragility that higher than today, because now we have higher reserves of dollar, and the price of commodities increased because at the time it was lower, and with the external fragility, the idea was to stimulate exports and to cut ICMS tax for this stimulation to exports. So I am totally in favor of extinguishing this law, because this law, the same way that we needed regulation in the Constitution for the inspections, the Candir law foresaw legislation that was done with an extremely low amount to replace the states. So I'm totally in favor of extinguishing this law. I think that Rio de Janeiro would have solidarity in the Congress with the Minas and Pará and other states' congressmen.
And it seems obvious to me that no large country like Brazil has a way to develop without industrializing and diversifying its production structure. We usually say that Nigeria and Norway started extracting oil around the same time. Nigeria would sell its raw oil, and Norway had a diversification strategy, and you can see how different the results were. So I'm not sure if I answered your question, but in the case of Rio, it's quite dramatic because we're usually known as those playboys that have rich parents. We have a lot of corruption that we need to fight and do our homework, but we have a revenue issue. Again, we rank 13th in tax collection because we can't tax when we export and neither when we produce because it's in the original location. So it's a hollow production structure. The federal government has 2 states in which it returns very little of what it earns. So it's São Paulo and Rio. So the federal government returns a fourth of what it collects to the government of the state. In Minas, it's a little more generous. It returns half. And in the Northeast, it returns a lot more than it collects. But the state of Rio is still the state of Rio. We are a state that it has been remedied by all of the decadence that we've seen in the past. So when we're discussing with the National Treasury, or FMI, Delfin, when he signed the agreements in the 80s with FMI, he said that he did so in order to, take his head out of water, but not further. And we need to discuss that in a more substantive manner, thinking about industrialization and diversification of our production structure, and rediscuss legislations like the Candir Act. In the case of oil, it is still even more severe than mineral extraction, because in Rio, it is extracted from the sea, so it generates less consequences than the extraction of raw material from land. When it is done in the ocean, it generates less jobs, less structure, so to us it's still a little dramatic. We have one more question. Good afternoon. It's already 20 past noon. I'm Mario Galvão. I work in the Maricá Institute, and some issues are determined in terms of fund regulation because it has effects on very severe political issues. The regulatory bodies look at the public managers as a thief regardless of proof. They observe public activity as an activity that is criminal. And on the other hand, there is disorder there's public disorder to set up a structure that provides solutions to the objective issues of the people. So Brazil has strategic issues and challenges and immediate issues as well. So yes, I believe funds need to have a hybrid role. It needs savings. If you take the example of the pandemic, who held the situation together in Maricá? So basic income, providing money to entrepreneurs to not generate unemployment. It was a sovereign wealth fund. They provided that reassurance. And at the same time, the biggest issue, the biggest strategic challenge is the source of investment for attracting production activity and the national challenge, which is industrialization. So that takes place in different layers, because if you take the state of Rio, Mauro, using this as an example, infrastructure is a tragedy. If you take Maricá, it's 60 kilometers from the city of Rio. It has water supply issues. The metropolitan region of Brazil also does. It's around the same distance. You have water supply issues. You have energy security issues. roadways and transportation issues. So we have issues in supplying internet. So there's acute infrastructure issues that predates any production activity. These are issues that would attract investment. So there needs to be flexibility and hybridness that allows for the existence of savings, because there could be catastrophic situations in which you need a reserve. However, it also needs to have as its goal to foster development, so that after that transitional source of income is over, then you can build diversification in economic activity in addition to the contribution. There's that challenge of generating jobs and whatnot. So that's the biggest challenge we have in the regulatory issue of these sovereign wealth funds. I fully agree. The challenge is for the regulation to include both of the points you mentioned. So with that question, we'd like to finish the panel. Thank you so much to everybody, especially our guest speakers. Thank you. We'd also like to thank our moderator, Bianca Carrasco. Thank you for the participation of the Mayor of Congonhas, Minas Gerais, Claudio Antonio de Souza, as well as the President of the Development Bank of Espírito Santo, and the Director of the Brazilian Association of Development, Manira Budi, and we'd like to ask for a round of applause for them. You are also to be congratulated for your presence here in the first part of our day. We'll have a break of 1 hour and 40 minutes. We'll return at 2 sharp. Have a great lunch.